Hey, welcome back to Right on the Money, your go-to resource for the financial topics that matter to you. Now, if you are just joining us, we're here with Mark Miller, President and CEO of Hilton Tax and Wealth Advisors. Mark, it is so good to have you here.
Good to be here.
The reason we're here is to talk about this book, Hilton Wealth, How to Invest Like an American Dynasty. Now, folks, you need a copy of this. And in fact, this is segment 2 of this conversation. And so you want to go back, catch segment 1, but if you want a copy of the book, and you do, it is a fantastic book. We'll put the website. That's the best spot to go.
Right, HiltonWealth.com.
Okay, we're going to jump in and we're going to talk about the key principles, some of the unique strategies in the book. So one of the core ideas in your book is smart money investing. Could you break that down, what it means and how it differs from, say, the common retail approach?
Right, this is such an important distinction, and sometimes it's really hard to kind of get this across to people, but the vast majority of people, even sometimes very wealthy people, are investing on the retail side of the business. That's like with the Fidelities, the Vanguard, Schwabs of the world.
Yeah.
And sometimes often they'll have like these private client side, so make them feel a little better if they have a little more money and that they're getting these more advanced strategies. In reality, that's not really the case. Smart money is the institutional side of the business, and that's the side of the business that has the big money and all the wealthiest of people that get all the best deals. Okay, one of the biggest things that keeps the retail side running is the fees that they charge consumers, and those fees can be very, very substantial. And by the way, there's lots of hidden fees that people don't know about. They think they're just paying whoever they're paying 1% per year. There's generally a lot of other fees that they're paying. Well, on the smart money side or the institutional side of the business, the vast majority of institutional investors don't pay any fees.
That is fascinating.
Yes, which is huge, because those fees, if you're paying 2 to 3 to 4%, including the fees you see, and then internal fees, that's taking away from the long-term success of your portfolio. So on the smart money side, they don't pay those fees, so they're automatically making another 2, 3, 4% per year.
And that definitely adds up. So let me ask you this: the book highlights. This is a great part of the book. Highlights lessons from Conrad Hilton's investment journey. So what would you say are some of the most impactful lessons that readers could apply to their own financial strategies?
Well, the biggest lesson, the difference between the retail and the smart money side is the retail side is focused a lot on greed. So that's why you'll see in mutual funds, how do they advertise them? How do they sell them? The 1, 3, 5, 10-year performance, and that's how you should pick a mutual fund, right? And people think that's fine, just go from that. Well, that's from a return standpoint. The wealthiest of the wealthiest, like Conrad Hilton, are first and foremost focused on safety. So safety is the most important thing. And on the smart money side, the returns are just going to be there. They know they're going to be there in different opportunities and what's available on the smart money side. So Conrad was always about assessing the safety and security. And even though a lot of what he did was in the real estate world and hotels, he diversified into other areas too, and set his portfolio up first and foremost to where if something really bad happened, that it wasn't going to devastate him and put him in bed. And ultimately that paid off for him, and it pays off for all smart money investors long term.
That brings me to the next point, which is you talk in the book about low volatility investing as a powerful tool. So why do you think this strategy is often misunderstood, and how could it benefit the everyday investor?
So low volatility investing is basically, if you were looking, let's just look at stocks. Low volatility is investing in more established companies that maybe have steady growth, maybe throw off good income or dividends. And it's been proven year after year, and the wealthiest, if they invest in the stock market, will invest in this way because it's been proven when you have less volatility, you tend to make better returns over time. And there's been plenty of studies on that low volatility investing, you'll generally get another 1 or 2% per year long term over high volatility investing, more volatile type of stocks that are going up and down. Now, why is that? It's because it goes back to the philosophy I was just talking about safety first.
Yeah.
When you eliminate big losses in your portfolio, you're not sitting around for 2, 3, 4, 5 years to get back to even so you can start making money again.
Yeah.
And the wealthy have known this for decades and decades and decades. It's just that on the retail side, you really don't learn these things because most of the time we're sold and they sell us on this concept of the only way you're going to make money is if you sit in these high volatility stocks and just let them do their thing over time.
Yeah. How do Hilton True Wealth portfolios reflect those principles?
What we've done is we've basically taken these high-level strategies and brought them a little more down to Main Street, which is what Brad Hilton and I's real kind of passion is. And we've made kind of a bucket concept to where we have different buckets where we have a guaranteed safe bucket, we have a bucket that throws off guaranteed income, and then we have a managed money bucket, which is more traditional type of stuff. And then the really cool thing about what we do is then give folks access to generally people that have to have $20 or $30 million, access to a private equity pool of different type of options to help them get really good long-term returns.
I like it. Is there a preferred method to get in touch with you?
Best way to do it is just go to our website,
Okay.
which is hiltonwealth.com, and all my contact information, all my company's contact information is there. You can just reach out directly to us and we'd be happy to chat with you.
All right, so here's what we're going to do, folks. Remember, if you like the show, do us a favor, squeeze the like button, click subscribe. That way you will not miss a single episode. We will see you right back here in just a moment. We're going to talk practical applications and takeaways.